If you're looking at a Singapore stock and wondering, should I buy this? Well, do not guess. Instead, do this, right? Whether is it OCBC or Keppel or Sheng Siong, doesn't matter what Singapore stock, right? There are a few simple things that you have to check before actually trading or investing in that particular stock. And for me, right, I'm going to show you guys in this video what are the 4 special elements that I actually look for, right, before pulling the trigger, right? Whether is it to buy or to sell, right? So that you don't get stuck holding something that goes nowhere or worse, going down, or rather, you focus on strong winning stocks that can potentially make you profits. Let's go. So let's take a look at one of the stocks that has been in my watch list for a while, all right, since last year. And this Singapore stock is none other than this company called Centurion, right? So on the left is the chart, which we'll dive into it right in a bit. But right now, let's just focus on this right bar. You can see, so this is Centurion, and Centurion, you can do a little bit of research. It is in the business of providing purpose-built accommodation for workers, for students, dormitories, and all that, right? So growing very rapidly. And let's find out about the fundamentals of this particular company. So you can see right over here, you can just scroll down and we can find out a little bit on in terms of the fundamental aspects. So you can click on more info like the earnings, dividend. So basically, to click on it, you can see that we have a very quick overview on how is Centurion actually doing. So you can go to overview. And this is what it's saying, right? You can see Centurion is an investment holding company. It engages in the ownership, development of these purpose-built accommodation assets. It does like workers' accommodation, student accommodation, and all that. So you can read more about it and understand a little bit of what the company is actually doing, right? Is it aligned with what you are, thinking about investing, right, in this particular sector or space? And you can have a quick overview of whether the company is actually making money, all right, over the past couple of quarters or past few years. So you can just scroll down and see it. Look at this, right? Growth and profitability. So you can see right over here, you can look at the annual or semi-annual, but very quickly, based on annual, you can see that this company has been pretty much making money, all right, and the profits is actually increasing. Net income is increasing from 2022 all the way to 2024, end of 2024. And you just click on this to find out a bit more. You can see, right, so this is the income statement. Total revenue since 2020 to 2024 it's been going up 26%, 39%, 14%. So year-on-year revenue has been increasing. So you want to kind of invest in a company whereby it is growing, the revenue is growing rather than going down and down. So you can take a look at net income as well, all right? And you can see that over the past few years, net income based on the year-on-year growth has been increasing as well, 16%, 198%, 200%, just to give you guys an idea of what to actually look out for from the fundamental aspect. So you can also find out a little bit more on the company in terms of like the dividend yield that is giving, like for Centurion, it's giving about 2.33% dividend yield. So if you're looking for a stock with a decent dividend yield, well, that is about pretty good, 2%, all right? Of course, there could be potential capital upside as well on top of the dividend yield. So that's what you could do, right? The very first step is to understand the fundamentals of a company very quickly. If its revenue is growing, if its net income is growing, you can look at the cash flow as well. You can look at some of the valuation metrics like the PE ratio, right, and compare it with its peers as well to see whether is it undervalued. So we'll not dive too much into fundamental aspect, but these are some of the things that you can actually look out for, right, from the fundamental perspective. So what you could do is this as well. You can go to Google, right, and you just put like the company name like Centurion, SGX earnings. Just type it out, Google, enter, pump, and there we have it. You can see that very quickly. It comes up with an overview, right? Centurion, the code is OU8, reported a significant increase in earnings, full year 2024. Net income increased 125% year on year. Revenue increased as well, 45%. So that is kind of like a gauge, just by Googling, all right, like the company name, SGX space earnings, you get a quick overview of what is the company's results over the past quarters. So now that the fundamental aspect is done, all right, and you know what is the company doing, then you move on to the second step. And the second step will be to look at the technicals of a particular stock, right? So basically, right, when I focus on a stock, there are only 2 things to look at, right, in terms of 2 perspectives. One of it is the fundamental analysis, right, whereby you look at the balance sheet, the income statement, and all the stuff, right? And it's important as well because you want to invest in a company that is fundamentally strong, that's making profits, that's growing, all right? And that is the first thing. The second thing will be technically on the charts. It must look good on the charts as well, based on what it's saying in terms of the candlestick and all that. It must look good because if it's good fundamentally, but technically it looks like crap, it's like going down every other day, it's in a downtrend, then probably don't want to buy. Does it make sense? But if it's strong fundamentally and technically it looks strong as well, great. That is where you get like 2 pluses, right? 2 pluses, and that is where you have more confidence to take that particular buy trade. Does it make sense? So now that we look at the chart for Centurion, you can see that the price now is about $1.34. So very quickly, when a stock is fundamentally strong, we want to also buy stocks that are also technically in the longer term uptrend, right? So how do we tell if the stock is in a longer term uptrend? Well, very quickly, we can go to look at the chart over the past 1 to 2 years. We do have to dive into like 5 years or 10 years. That's a bit too far back. But over the past 1-2 years, you can see that we have been forming what we call higher lows, right? Higher lows. So the lows actually get higher and higher and higher and higher and higher over the past 1 to 2 years. It means that buyers are actually coming out to defend the stock, to push it higher, and they're even willing to buy at higher prices to support the stock. So the support actually goes higher and higher. So that's a good sign of a good uptrending stock that can potentially move up even higher, whereby the long-term trend is up. And you want to focus on stocks that are in a long-term uptrend because you don't want to go against the trend. So that's how you can tell the long-term trend of any particular stock, right? Once they look good fundamentally as well. So very simple. The next thing you could do is that, apart from the higher lows, what you could do is that you could look at what we call the moving averages. So for me, right, I've, pretty much two moving averages that focus on the long-term trend. And the first moving average, you can see this red line right over here. That would be what we call the 100 days moving average. The blue line will be the 200 days moving average. I've been using these two lines, same colors, more than 10 years now, all right? And that's what I do. So how do we tell if the trend is up in the longer term? Well, very simple. We can just take a look at, this red and blue line. Are they both pointing up, first of all? If the answer is yes, good. So both of these two lines must be pointing up. Very gently, could be steep as well. But if they're both pointing up and the red 100 days moving average is above the blue 200 days moving average line, then I think we are in a pretty good long-term uptrend. That is another confirmation, right, on top of the higher lows that we formed over the past 1 to 2 years. So that gives us a good indication that you want to buy stocks like this. The next thing that we're going to focus on, and that's step number 3, will be to also understand the trend of the stock in terms of the short-term trend. So over the past like 1 week, 2 weeks, 1 month, is it up or down? So how do you do that? Well, very simple. You can take a look at this green line right over here, and that would be what I call the 20 days simple moving average. So if the line is like pointing up very gently, prices above it, great, we would be in a short-term uptrend. But if the line starts to like flatten out, going sideways, well, then we might be in a bit of a sideways consolidation phase. Nothing wrong with that. This means that it's taking a breather, all right, resting, moving sideways for a while, and potentially pushing higher again in the short term if the green line were to start to turn back up. So you can see, like for Centurion right now, right, the longer term trend is up. It's been up like since 1-2 years ago. The short term trend was like flat, but since like March, April, it started to point up very gently. Now it is still pointing up. So we want to focus on stocks whereby both the longer term trend is up and also the short-term trend is up. So once you have done this, right, so fundamentally it looks strong, revenue is growing, net profit is increasing, cash flow is strong as well in terms of the intrinsic value PE ratio, where it's considered undervalued compared to its peers, even better. And on the chart, longer-term uptrend, short-term uptrend, there would be a lot of pluses, right, in regarding that you could actually think about buying stocks like this. And that brings us to step number 4, right, as to where do we want to take a position in the stock? Should we just anyhow buy right now, or like, just close our eye, just buy at this price? What would be the best prices to think about entry that gives you the most reward for the particular risk, right? Maybe when should we get out if the stock were to reverse back down, or you just hold it all the way down, right? No, you don't want to do that. You want to have a plan as well, even though it's strong, but you want to have a plan such that, if you were to break certain levels, it's going down, you might want to get out, because you don't want to ride the stock all the way down and incur massive losses, right? You want to make sure your losses are kept small, but if it goes higher and higher, great, you ride further, all right, ride further and make potentially more profits. So let's find out into step number 4 as to where do we want to think about getting in and out. So basically on any single stock, whether it's Singapore stock, US stock, but in this video, we're talking about Singapore stock, right? Well, I have this strategy that I call it the one good trend strategy that, comprises of what I call the longer term trend, the red and blue lines, the green line as well, all right? And I have this indicator right over here based on this one good trend strategy, and this indicator is called the one good trend pro indicator right over here. And you see in a matter of seconds, so I've turned on the 3 moving averages, the green line, red line, and the blue line. Look at this, right? Off, and you see the 3 lines actually disappeared. So is incorporated into this one good trend pro indicator, which I've explained to you, right? The green, red, and the blue line that allows us to get an indication of the short-term trend and the longer-term trend. But based on this as well, from this indicator, I can quickly turn on that's another confirmation, right? Whether are there any bullish or bearish signals. Let me just turn on this first box right over here. 1, 2, 3, pump. All right, and you can see that it shows what we call buy and sell signals based on the one good trend strategy. So let me just go to remove this box over here, and you see that now we have a couple of bullish green signals coming out and even bearish red signals. So any stocks, any asset classes. So for this stock, Centurion, well, longer term trend up, short term trend is up, and we actually had a couple of bullish signals since last year. So this was in August 2024. This was like in April 2024, all the way up, all the way up. We got a bearish signal. So once you get a bearish signal, well, it can guide you to get out, take some profit, cool off a bit, maybe think about getting in again when you see a new bullish signal. So let's take a look at what has happened for Centurion, right? So all the ticks are happening, right? We got fundamentally strong, longer term trend up, short term trend is up, and you can see that over the past 2 to 3 weeks, we actually have another, or kind of like a brand new 1 GT bullish signal coming out, right? The green line that was like up, right, flat a little bit, started to point up even more. So this green bullish signal would be another confirmation where, well, we could really start to see more strength. It's attempting to push higher. It has broken maybe the 125 to 120 resistance level. Now it's 1.34. So that's where it looks pretty okay, right? But based on this bullish signal that give us another confirmation of when to get in, well, how do we know what are the levels so that we could time our entry to ride even more upside? So that's where, based on this indicator, we can turn on what we call the trailing support and resistance. Let me just quickly turn it on right over here. 1, 2, 3, pump. And you can see, right now, after turning on, you can see that there is what we call this green line below prices that actually follows and moves up as the price of Centurion move up. So that was like the bullish signal in August. You can see previously in April, in February last year, we got a bullish signal, and that's where the green trailing support line starts to pop up. So this trailing support, just to give you guys an idea, it gives us an idea of the trend, right? As long as the price is above the trailing support, we are in a pretty good uptrend as well, as another confirmation. All right, and this trailing support, as the name sounds, right, it follows the stock as it moves up, right? It gives it space, the breathing space, the allowance to hopefully move up even higher. All right, and as long as we stay above it, we are pretty okay. And if we were to dip near it, right over here, like we dip near it, well, that could be a good potential entry as well to get in to ride even more upside, or for potential rebound, especially if the short-term trend is still up. So you can see, right over here, all right, got a bullish signal. It starts pushing up, all the way up to here. Finally, a bearish signal came out. There'll be like 45% in about 3-4 months. All right, pretty okay. And when the bearish signal appeared, you can see that was why. The reason was because we broke below the trailing support. So this trailing support accounts for volatility. It gives the stock space to breathe, to hopefully stay above it, to move higher. But if you're to go below it, right, it's not so good. It could mean some selling pressure. If came back, if you get out, take some profit, I think that's fine as well. So let's take a look at Centurion right now. You can see, right, based on this bullish signal that happened about 2 weeks back, well, a new trailing support line has popped out right over here. Look at this, right? So it came over here, flat up. Now it's starting to follow it, and there's some space, all right over here between the price, all right, and the trailing support. Why? Because as I say, right, this trailing support gives the stock space. It doesn't follow too closely, right? You give it space because it accounts for volatility. If it's going up and now very speculative, that's where we give it more space, right? If it's like not really moving that much, then we probably don't need so much space, right? But based on this stock, you can see that it's starting to move up, so there's some space given, and we are, trading at a slightly higher level above the trailing support. So I'll say right now, well, a horizontal support level maybe could be near the 125 that was originally. You can see right over here, a little bit of a resistance here, a trailing resistance that would now be a support. For the past 2 weeks, we are trying to stay above the 125 level. So if you could, dip a little bit to near 125. I'm not too sure exactly whether it will dip there, but if it does dip to near 125, near, not at, but near 125, whether is it 128 or 127 or 129, if it does dip to that, well, that could be a pretty good entry in terms of, a little bit more attractive, cheaper prices that is holding above the horizontal support, all right? Or best, if it does dip to near the trailing support, maybe near 120, even better. That's where it could get in a little bit cheaper. But the point here is that nobody knows whether it will dip to that level for you to get it. So you could lock in some positions maybe near the horizontal support, all right? And if it does dip a little bit to near the trailing support, that's where you could time your entry to get back in, because all in terms of the confirmations are all pointing to up rather than down. So fundamentally is up, long-term trend is up, short-term trend is up, a bullish signal has popped up, the trailing support has popped out as well, prices is above the trailing support. So all these things are all looking good rather than bearish. So that's how you could time your entry to dab in or to potentially ride even more upside. So next thing is that you want to have a plan. It's a little bit more advanced, but you also want to have a plan, especially if you are thinking about taking like a short-term trade. You want to have a plan to see that if the plan actually makes sense. And that's where you want to do what we call proper position sizing to know how many shares to buy. So you can find a little bit more, guys. You can tap all those free webinars, the links right below the video. Find out a little bit more as to the entire one good trend strategy. How do we combine everything? How do we use this indicator to guide us on entry and exit? I mean, how do you even look at all these bullish and even bearish signals? But let me just share with you guys very quickly is to risk management as well. So for example, let's say you want to think about getting in on this stock maybe near the 120 to 125 level, and target could be maybe all the way to like $1.60 to $1.50. Let's just put $1.50 for now, all right? That could be a near-term target, all right? And if it dips a little bit to near 120 to 125, you could think about getting in. Stop loss could be just below the trailing, all right, support level. As I say, this trailing support follows a stock as it moves up. So if you're above the trailing support, it is okay, all right? It's okay. But if it go below it, I mean, even though you give it space, but it goes below it, then it might not be so strong. You might want to have a plan to get out or reduce some exposure. So based on this, you can see that there's a plan that we have formed, right? Based on the entry price, really near 120 to 125, target to like about 150. Well, there's a reward to risk ratio of about 4.67. So we want to have a pretty good reward to risk ratio of at least more than 2 times. So that means for every $1 that you're willing to lose, you can potentially make $2 or more. All right, it doesn't make sense to only make 10 cents, but you lose $1. All right, so you want to make more, at least 2 times more than the risk that you are taking. So that's a little bit on risk management, all right, on how you can build a plan after getting all the factors, all the elements that are taken, those are the fundamentals, the trend, bullish signals, and all that. So what happens is that if the stock were to move even higher, you take a position, right, you want it to go up, great, and if it to move even higher and higher, you want to take steps to also protect your profit, such that you don't want to just erase your profits if it will come back down, right? And what you could do is that you want to raise your stop loss higher as it moves higher. And how could you raise your stop loss? Well, you could use the trailing support level as a guide. So if the trailing support were to, like for example, let's say you got in over here and the price starts to move higher to 140 to 150 to 160, well then this trailing support, as I say, right, it follows the stock as it moves higher. So you can see the green line will probably be following it, something like this, right? Like it might follow and follow and follow as it moves even higher, something like this, right? So what you could do is that as it moves higher, you could also have a stop loss, all right, that is moving up as well, following the trailing support. So this stop loss could be below the trailing support. So as it goes higher, you follow it, but it still stays below the trailing support. So that's how you actually protect your profit, such that one fine day, if prices were to like move up and up, like let me just put in black color, so move up and up, consolidate and pump, right? It breaks below the trailing support. That's where we would have like a bearish signal, and you could also get out, take some profit, because that's where we could potentially see a reversal back down, or like a short-term weakness actually coming back. So there we have it, guys. This is pretty much like the 4 elements that I look out for in terms of the fundamentals, in terms of the technicals as well, all right, to really give me an opinion on any single stock, right? So based on this one good trend pro indicator that I have, all right, you can simply type the name of any stocks and get a view in terms of the technical aspect. Was fundamentals, I say you can do a little bit of homework, Google, all right, pull out some tools as well, just to understand a little bit on the company, what is it doing, what sector is it in, is the revenue growing, is the net income growing, all that. And if all this looks good, right, fundamentally and technically, and you get bullish signals, everything aligns, I think that's will be what we call a high probability trade, or a winning high potential trade as well. And that's where you want to take a position in that trade, right, with a plan, right, a plan to potentially make even more profits. So you want to find out a little bit more in terms of my entire one good trend strategy. As I say, just click on the link below the video, register for this free webinar, and share with you guys a bit more on the entire strategy. And more importantly, right, if you're looking at any stock, whether is it like, DBS, like for this stock, Centurion, or any Singapore stock, right, you can do the method I just mentioned just now. But the question is that stock in the top 1% of stocks that you want to be focusing on, or is it just like random? Where do you even get the stock name, right? And that's exactly what I'll share in this webinar as well, whereby I'll share with you how do we actually pull out or focus or filter out the top 1% of winning stocks in the Singapore market before knowing exactly when to buy and sell them. So you'll find a bit more on how to filter the stocks out, and you'll be guided on entry and exit. Well, attend one of those free webinars. The link is right below the video. So Joey here, thank you so much for watching. I hope you learned something in this video. If you found it useful, good to hit the subscribe button, smash the like button as well. That will really help out the channel. And thank you so much for watching. I'll see you soon.